Today's topic is real estate. What is real estate? It benefits, risks, and considerations. Real estate investment can be an attractive option for investors seeking to generate passive income, achieve long-term capital appreciation, and diversify their investment portfolio. However, like any investment, it also comes with risks and requires careful consideration before committing funds. In this article, we will explore the benefits, risks, and considerations of real estate investment, providing a comprehensive overview of what investors need to know before investing in real estate. Real estate investment refers to buying, owning, managing, renting, or selling property for profit. It is a popular form of investment due to its potential for generating passive income and long-term capital appreciation. However, like any investment, real estate carries risks and requires careful consideration before committing funds. In this article, we will explore the benefits, risks, and considerations of real estate investment. Benefits of real estate investment. Passive income. Real estate provides a steady stream of passive income through rental payments. This income can help investors achieve financial independence and retire early. Tax advantages. Real estate investment comes with numerous tax advantages, including deductions for mortgage interest, property taxes, and depreciation. Diversification. Real estate investment provides diversification to an investor's portfolio. This can help reduce overall investment risk by spreading capital across different asset classes. Inflation hedge. Real estate investments can serve as an inflation hedge by increasing in value as inflation rises. This helps preserve the purchasing power of an investor's capital. Potential for capital appreciation. Real estate has the potential to appreciate in value over time. This can result in a significant increase in the value of the property and provide a substantial return on investment. Risks of real estate investment. Market risk. Real estate markets can be volatile and unpredictable. Property values can fluctuate based on changes in supply and demand, interest rates, and economic conditions. Liquidity risk. Real estate investments are often illiquid, meaning they cannot be easily sold or converted to cash. This can make it difficult to access funds in an emergency or take advantage of other investment opportunities. Maintenance and repair costs. Real estate investments require ongoing maintenance and repair, which can be costly and time-consuming. Tenant risk. Real estate investments that rely on rental income are subject to tenant risk. Tenants may not pay rent on time or damage the property, leading to lost income and additional expenses. Financing risk. Real estate investments often require significant upfront capital and may be financed through debt. This can increase overall investment risk and create additional financial obligations. Considerations for real estate investment. Location. The location of a property can significantly impact its value and potential for rental income. Investors should consider factors such as proximity to transportation, schools, shopping, and other amenities when selecting a property. Property type. Different types of properties, such as single-family homes, multi-unit apartments, and commercial buildings, have different risks and potential returns. Investors should carefully consider their investment goals and risk tolerance when selecting a property type. Financing. Investors should carefully consider their financing options, including mortgages, home equity loans, and private lending, to determine the best approach for their investment strategy. Property management. Real estate investments require ongoing management, including tenant screening, rent collection, maintenance, and repair. Investors should consider whether they will manage the property themselves or hire a professional property management company. Exit strategy. Investors should have a clear exit strategy in place before making a real estate investment. This could include selling the property, refinancing, or converting it to another use. In conclusion, real estate investment can provide numerous benefits, including passive income, tax advantages, and diversification. However, it also carries risks such as market volatility, liquidity risk, and tenant risk. Careful consideration of location, property type, financing, property management, and exit strategy is necessary to maximize the potential benefits and minimize investment risk.